The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel, here to help you take you through the closing bells. It's our global simulcast. It starts right now. Scarlet Fu in the TV studio, Carol Massar and Tim Stenovec in the radio booth. Welcome to our audiences across all of our Bloomberg platforms. On a pretty historic day here, Carol Massar, a huge sell-off in tech with the Philadelphia Semiconductor Index hitting fresh lows on the day, down 7%. Worst day since the onset of the pandemic.
Really substantial, right? It's something that we've been talking about. I know you guys have as well. A couple different reasons, whether, more restrictions potentially coming out of the Biden administration in terms of tech sales related in the semi area to China, but also, thinking about the Bloomberg Business Week cover story where Donald Trump was asked about, protecting of Taiwan, of course, home to TSMC, and not necessarily saying that he would run to Taiwan's aid, which makes you wonder about, okay, what does that mean for the global supply chain in the semiconductor world?
And it's not just semiconductor stocks today. We got Apple shares down 2.5%, Meta Platforms down 5.6%. We got Amazon down 2.6%, Microsoft down 1.3%. The Mag 7, big tech, the stocks, you name it, it's selling off.
Remember when we ask everyone what they think about the election and how that's going to affect markets? And everyone says, no, it's too early to talk about that. It won't happen until we get closer to November. It's happening.
Well, that was also sort of my point earlier, is that were we already sort of set up for something along these lines? I was saying that Scott Rubner at Goldman says that today usually marks a turning point for returns on the equity benchmark. This is going to data all the way back to 1928.
Yeah, well, it gets to the point, too. I think to Scarlett's point, too. Elections do matter, not always in the most dramatic way, but they certainly do. An interesting day. And just look at that screen here, because this really tells a big part of the story. You have a Dow Jones Industrial Average up 240 points, up 0.6%, really on the back of just a couple of names. That's a record high. But let's flip now to the other stocks here on the screen. You have an S&P 500 down almost 80 points, more than 1% here on the day. A NASDAQ composite down more than 500 points, or about 3% on the day. And you have a Russell 2000 also down about 1% here on the day. And there's some pretty big moves to the downside. We talk about the Philadelphia Semiconductor Index down the most since 2020, Carol. And, of course, that NASDAQ 100 down the most since 2022.
All right, let's get to it because some earnings crossing. United Airlines crossing. Here's the red sticky, as we call it here at Bloomberg. Second quarter adjusted EPS, folks. It's a big beat. $4.14 a share. That compares with a street estimate of $3.93 a share. So you're talking about 21 cents to the upside. Also looking at passenger revenue, $13.68 billion. That's a little light. That's for the second quarter. $13.74 billion was the street estimate. Also looking at second quarter operating revenue. That's coming in just a hair light, $15 billion, Alex. That compares with an estimate of $15.04 billion. Stocks down about 1.8% here in the aftermarket.
Yeah, let's get to some of the details here. So they say in the press release that the company sees mid-August now as the inflection point when industry-wide oversupply eases and United is positioned to benefit. Basically, overcapacity, that weighs on fares, that weighs on revenue, and they see that mid-August is that inflection point. But that does imply, though, that that top line stays strong and that travel does stay strong. And you're taking a look at the stock down by about 2.6%. Yeah. They're also talking about premium revenue, basic economy revenue, and market share shift, all among the domestic road warriors, all that gaining momentum in the second quarter for them.
I am curious, though, too, when they talk about, they're basically saying they're going to pull capacity in order to deal with this here, but there are still some other costs that they have to contend with that they mentioned in the release here that really aren't going to be solved necessarily by taking planes out of service. And I do wonder how you right-size this ship if there is legitimately a softening in demand for air travel.
Yeah, it's interesting because, not apples to apples, but Spirit Airlines reported earlier today, and they said that that they actually had total revenue for the second quarter they thought would be lower than they expected, but it wasn't because of capacity issues. It wasn't because of ticket revenue. It was because of non-ticket revenue. United coming out and saying that revenue diversity is helping them and that they have they've been preparing for this idea that Alex was talking about that inflection point being when there's an industry-wide domestic capacity would just, they're well positioned for that. they're ready for that.
Yeah, not to mention the fact that they, of course, benefit from strong travel demand in Europe and in Asia, which kind of sets it apart from some of the other carriers. Let's just go to IMAP for a moment, because even as we look at the market and the sell-off, especially in the tech space, whether you're looking at chip makers or software companies, overall, you have more advancers than decliners when you look at it on a sector basis. Consumer staples, energy up by at least 1%. Financials also higher by 0.9%, but it's the heaviest weighted sectors, tech, communication services, and consumer discretionary, that are really weighing on the S&P 500. They're each down by at least 1.8%.
All right, that's a sector look in terms of winners and losers here. Let's get to some of the individual gains, if I may, in terms of the trade. And keep in mind that about half the names in the S&P 500 actually did post gains today. Intel at its highs today, despite the sell-off in the semiconductor index. You did see Intel at one point up 8% in today's session, just eking out a little bit of a gain, 0.33%. What's interesting is Intel and Global Foundries were two names in the semiconductor sector that we did see actually rallying in today's session. Basically, investors doing some speculation that the two could benefit potentially from some fresh policies under either a Biden or Trump administration. The other thinking was that business recovers story where Donald Trump was saying, wait, maybe we won't come to Taiwan's aid should China put intense pressure or amp its pressure up on Taiwan. Specifically, Taiwan, of course, home to TSMC, a foundry. Intel increasing its foundry build-out, certainly here in the United States. Same thing for Global Foundries. So Intel was up a little bit in today's session. Global Foundries was up, finishing the day with about a gain of 7%. So investors may be thinking, okay, just a lot going on in the semi space, and maybe these are two names that ultimately benefit. Got to mention Roche Holding, ADRs that trade here in the United States, up about 7.5%, pretty much finishing near its highs of the session. The company out, experimental weight loss pills showed meaningful weight reduction in an early stage study among obesity patients. So this company could certainly be a challenger to the likes of Eli Lilly and Novo, who definitely did see some pressure in today's session. And just real quickly, J&J also out with the earnings today, and Johnson & Johnson up 3.7%, outperformance there. Second quarter profit beating Wall Street projections. Strong pharma sales. Company cut its full year forecast, though, to account for a spate of recent acquisitions. So you did see some names actually pop in today's trade.
Okay, some names that didn't pop today were certainly semiconductors. Worth revisiting what happened on the stocks today after that broad sell-off in chip companies. Down 6.8%, its worst day since March of 2020. Interestingly enough, only trading at levels last seen just about 3 weeks ago. The concern, again, is that tighter U.S. restrictions on chip sales to China and the Biden administration telling allies that it's considering using the most severe trade restrictions available if companies such as Tokyo Electron and ASML continue giving China access to advanced semi technology. We saw those stocks sell off overseas. Here in the U.S., we saw NVIDIA, AMD, and Broadcom fall as well. In addition to that, it wasn't just chip stocks that fell. We also saw mega cap tech under pressure. Meta and Alphabet fell today. Also, shares of Apple under pressure, falling 2.5%. And I mentioned Spirit Airlines in the context of talking about United just a little earlier. Spirit shares fell after the company estimated that total revenue for second quarter would be lower than previously expected, mostly due to non-ticket revenue. So what we're talking about is the add-ons that it charges separately for assigned seats, printed boarding passes, an in-flight bottle of water, heavy bags. That's where the shortfall is coming from, not necessarily lower fares, as other airlines have talked about, Alex.
Yep, so good for consumers, not as good for the company. Let's get back to United here, because it's also dragging down other airlines as well. So that second quarter adjusted earnings did wind up beating estimates, but it's the third quarter adjusted earnings coming in at the high end at $3.25. Even that winds up missing estimates. They do talk about, though, how they grew basic economy up 38% and premium up 8.5%, and they're continuing to reduce their planned domestic capacity by about 3 points in the fourth quarter. So continuing that theme of managing what they can manage in terms of capacity as the overall top lines may or may not continue to be strong.
It gets to also the question of discounts. And I think when we talk about what was going on with Spirit and the idea that a lot of customers are finding ways to trim their own costs, so maybe not buying the tickets but not paying for those extra add-ons like Tim was talking about. And we kind of forget when we talk about Delta, United, these big carriers, yeah, sure, they have a front of the plane there that maybe has a premium price attached to it. But in the back of that plane, well, they still have a lot of economy and budget consumers who are much more cost conscious.
Even as it gave an outlook for this quarter that does miss the average analyst estimate, it did not provide an outlook for third quarter revenue, which is interesting because, Alex, as you mentioned earlier, it sees mid-August as this inflection point. So if fare cuts could start fading after that point, maybe there's room to surprise when it comes to revenue, and perhaps that's why it didn't give specific numbers for the top line for this quarter.
But again, United down about 4%. I do think, in the press release, CEO Scott Kirby of United saying, again, United has been long been preparing for the moment when an industry-wide domestic capacity would adjust. It's now clear that inflection point is just 30 days away. I mean, giving us a little bit of a timeline. So what that means, I'm looking at Delta, guys, down about 0.8%. JetBlue looks a little change in the after hours, and you've got Southwest down about 0.4% here.
Okay, so we'll hear from some more companies in the coming days, too. We haven't heard from all the airlines yet.
Yeah, we'll see whether or not this carries over.
I love your optimism, Tim.
Yeah, I know. I'm always looking forward to things. Glasses half full.
All right, guys, that's going to do it for our cross-platform coverage of the market close, of course, on Bloomberg TV, Radio, Bloomberg Originals, and YouTube. Alix Steel, you are heading out too, but no worries. She's going to be back tomorrow, same time, same place.